We decided already last year a path to the normalization of monetary policy. The December decision is an example of this. As you mentioned, by this we mean precisely taking on a more neutral stance. The normalization sequence is well known, and it will be data dependent. We don't have a timing for that. So what it means to have a more neutral stance at this stage is to continue our path of net purchases throughough this year, evaluate the data that we have at hand. Of course, inflation pressure is very high at this stage, but we don't see any evidence of second round effects. And that's precisely, I am also of the opinion that the conditions, for example, for rate liftoff are not met yet. Core inflation is driven by external factors and not by domestic factors such as wages and second round effects. Indeed, the ECB forecast for wage growth was revised downwards last week, and this is precisely where we are today.
Can I ask you, there was some head shaking, I think, in the financial community over a couple of aspects of the last announcement. And one was that it seemed to be surprisingly hawkish in monetary policy terms, and two, that the forecasts seem to portend a significant rise in unemployment. Do you think that in both respects the ECB and the forecasters got this right?
Well, it's very difficult today to forecast the economy, the European economy for the next few months. It all depends on the duration of the conflict. It all depends on how bad the sanctions will work in the European economy as well. So we are prepared to act according to the developments in our economy until the summer. That's why we keep saying, and this is to be taken very seriously, that we extend our options. We can act in either way, depending on how the economy goes. The unemployment is probably the best indicator for the European economy these days. I mean, we have a very strong labor market coming out of the recession. It was usually supported by fiscal policy measures. That's why I think coordination is a very important issue in Europe these days. Again, we took a very significant step in April 2020 in terms of the coordination of our monetary and fiscal policies, and we cannot lose that spirit. But I mean, even if it's not probably the most likely scenario today, a scenario with low growth and high inflation is not out of the possibilities in the near future, and we must be very careful.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.